Peace, love, and light to you all out there listening in. This is your host, X Limitless, again, as usual. You know how we do, bringing you another episode of Limitless Talks. This is that show where we talk about politics, economics, and of course, propaganda. Now, guys, a lot have been happening, a lot, but we can't cover everything. If we were gonna cover everything, these videos will be hours and hours long. But quick one, a funny one on the horizon. We got zero hedge reporting here. This, according to Goldman, is China's decarbonization investment budget through 2060. What it shows is that Beijing will need a lot of quantitative easing, QE, and very soon. It also means a major crisis will be needed soon to green light it. Guys, you already know the agenda. Problem, reaction, solution. Now let's look at this chart right here. Now, we need to understand one thing. Right now, they're shutting out all the power stations. You understand what I'm saying? All we've been hearing now is, green economy, green economy, green economy. And if you look at what China is doing quite the opposite. China keeps burning coal. As a matter of fact, their coal burning reached an all time high record recently. And they don't look like they're going to stop anytime soon because, as we all understand, China is the next, you know, industrial power. And they need, to keep the electricity on in order to keep making what they're making. We know they're not ahead by decades, you know, uh, for the fun of it. We know it's all by design. The same people that developed the Western world are the same people going back to the East to develop the Eastern world. You understand what I'm saying? If you look here, 2021, look at the chart, just below 200 billion. And as you go on 2026, by about 2040, this is where they peaked in terms of, how much they're going to allocate to each of these different energy producing sectors. And as we can see, you know, they all quite well distributed with major investment going into renewable power. Now, one thing we need to understand about renewable power is it is not scalable. We know that. You see, a lot of this investment going into this renewable power, which is pretty much constituting about 0.6% of their GDP. You know, we know this on uh, energy production methods that's gonna produce the same amount that a power station burning coal and all that is gonna produce. So we can expect energy prices to rise, which we're already seeing. So that's nothing new at all. And if you see here, Zero Hedge is talking about quantitative easing because we know they don't have the money. They're gonna have to multiply the money that's already in circulation in order to get the money. There's not enough money going round in the world. And when let's not start discussing the whole, money thing again. Money is not what we think we have today. What we have today is just a medium of exchange, nothing more. You understand what I'm saying? But that's the funny story for today. We can expect a major, crisis, which we cannot expect anyways. You know, there's a lot going on, and we should all just sit tight and hope for the best. Anyways, let's hit the intro and then get back to some of the other things we've got for today. Welcome back, everyone. This is your host again, Limitless. Remember, share with your friends, family, and loved ones, your haters, whoever they might be, because they need to hear this. The world we live in is changing, and we all need to understand how the current one works before the new one comes in, because it's even going to get more difficult. You understand what I'm saying? Because they totally revamping the way we work, the way we do everything. We know Industry 4.0 is all about the automation of the entire economic activities. So it's imperative that we get, our friends, family, loved ones all keyed up in terms of, what's going on, what's happened, and what's about to come. So, anyways, let's move on. Right here, we got crypto needs to get real about compliance. Again, this is one thing we know 2022 is going to serve. We've got ISO 2002 standards coming into force this year, and we know that's part of the agenda to bring global regulation for the crypto market. So as it says here, to achieve mainstream adoption, crypto needs to work with existing financial regulations, which is why Concordium's blockchain is designed with built-in regulatory compliance. So, you know, there's damn near a network for everything out there. You understand what I'm saying? Blockchain blockchain is here to stay. Distributed ledger technology is here to stay. It's here to streamline how we work, how we do things, how we transfer information from one place to another, how ready information is in terms of uh, uh, access to information. So people can access information like that. They don't have to wait hours or days to request information from another organization. No, they'll all be sharing the same network, and they can share the keys to that information with whomever they wish. You understand? So we need to understand right here, cryptocurrency has come a long way since the enigmatic creator of Bitcoin, Satoshi Nakamoto. Guys, we know the government put Bitcoin out there. Ain't no Satoshi Nakamoto nowhere, you know. But anyways, invest Bitcoin in 2008. Slowly but surely, major investment banks, publicly traded companies, and even government have come to embrace cryptocurrency. You see, all these big guys, they've got they've got crypto on their balance sheet. You understand what I'm saying? So we need to get clued up to that and understand. Moving on to what's going on in England currently. Obviously, as you all know, we got uh, a reply from the House of Lords in regards to the UK central bank digital currency, and here's the reply. House of Lords raised serious concerns over UK CBDC launch. The committee is worried about the possibility of bank runs. Like, say they don't do that already. Guys, come on. A joint task force is striding the feasibility of a digital pound launch. So the task force is between the HM Treasury and the Bank of England. And here's the latest report in regards, to that feedback. So House of Lords Economic Affairs Committee, third report of section 2021-2022, central bank digital currencies, a solution in search of a problem. A solution in search of a problem. Guys, deep that. What are they trying to say? You understand what I'm saying? What exactly are they trying to say? So here, The Bank of England and HM Treasury are jointly exploring the potential of a central bank digital currency. A CBDC is different to a cryptocurrency or a crypto asset such as Bitcoin, which is privately issued and not backed by any central party. Guys, we understand what the aim is. That's the way the world is moving. So we need to move with it. Otherwise, the UK will be left behind. So now, here, the government has not decided on whether to introduce a CBDC. HM Treasury and the Bank of England have created a joint task force to explore the risks and opportunities that may follow from the introduction of a retail CBDC, which would be designed to facilitate payments involving households and small or medium-sized businesses. Retail CBDCs differ from wholesale CBDCs, which are designed to facilitate payment between financial institutions. The bank is undertaking separate work to improve wholesale and high value payments, and it has cooperated with other central banks which are examining wholesale CBDC. So, if you go read this paper, you'll find out a lot more in regards to um, wholesale CBDC and retail CBDC. As the name suggests, retail just means for the masses, the main public, the consumers, and then wholesale has to do more with like the corporations and stuff like that, and big institutions. So, but another important part is the launch date. Here it says next step. HM Treasury and the Bank of England, the Joint Task Force, will publish a consultation in 2022 setting out their assessment of the case for introducing a CBDC in the UK. If there's a decision to proceed, the Joint Task Force will initiate a development phase, then a build and testing phase. The earliest date for launch of a UK CBDC will be sometime after 2025. Guys, we know there's no way the emerging markets are launching central bank digital currencies and they're trying to tell us the UK does not have one ready yet. Guys, we know they're just kicking this down the road. They need the emerging markets to be fully set up, operational, everything going nicely, smoothly before they allow the developed market to jump on, because we know they're trying to widen the gap. We know all the wealth and ventures funds, ventures capitals are all moving to the east. That's why a lot of the investment coming into the west now is actually coming from the east, and there's roughly about 28 trillion worth of Asiatic investment in the Western Hemisphere. So we need to understand the shift between the economic power. So 2025, we understand a lot of these other what do you call them will be fully set up by then, and they'll be fully operational, which will leave Europe, UK, US, and whatnot playing catch up. So the last thing I want to show us here is, you see, the same people within within the government are also the same people that are making decisions on on what's gonna happen to the nation, and these people have interest, and just like we understand, everybody's got an interest. And the people sitting on the House of Lords committee for this issue at hand regarding CBDC, it says here declaration of interest. Lord Bridges of Headley, senior advisor to and shareholder in Banco Santander, Madrid, Spain, editorial consultant, London Evening Standard. Like, you go through it like that, you'll see all of them. Lord Forsyth of Drumlin, chairman and non-executive director, Secure Trust Bank PLC. Lord Fox, no relevant interest declared. Baroness Hardings of Wiscombe, no, recused herself from this inquiry. Probably, she's compromised in some way, shape, or form. Who knows? Lord Haskell, no relevant interest declared. Lord King of Lotbury, consultant to Citigroup Global Markets Limited. You understand? So these people, they will benefit from the United Kingdom having a central bank digital currency, because if anything, they want to do business easy as well. And UK is one of the big financial centers around the world. So moving on, we got Coinbase buys FairX to launch crypto derivative. The acquisition follows on the heels of FTX acquisition of Ledger X. Guys, we need to understand what's going on here. So the move could open the door for Coinbase to offer crypto derivative products in the US at present. Only a handful of exchanges allow US investors to trade Bitcoin and Ether futures, with cash settled products being both the most popular and the longest available products. So we understand what this is about. This is about tokenization of stocks, merging both markets and then using the blockchain and DLTs to basically uh, buy and sell a lot of the uh, companies that's already on the public exchanges in the current legacy market. So this is nothing new. We know this is coming. As a matter of fact, is the whole reason Coinbase was set up in the first place, to basically tokenize the legacy stock market, and we know that's definitely coming. Moving on, we got Cardano's DEX mini swap announces date for public testnet. Guys, it's been about time Cardano bring out some news regarding their system, because they've been quiet for a really really long time, and I gotta say I'm excited for this one, because a lot of the decentralized exchange out there, they've been built on Ethereum, and I mean the gas fee to still use this decentralized exchange network is immense. So having a blockchain like Cardano step in will be really really, it'll be interesting to see. Hopefully that should shake up that ecosystem there, because Ethereum just been dominating too much. So it'll be nice to see another layer one network having a DEX exchange built on it. But anyways, let's move on. So going on to the market, we've currently got just a bit over 2 trillion again. Crypto 16,900. I don't know about you guys, but I think that reduced. Or is it just me? If you know what, let's keep an eye on it. So 16,900 now. This might be reducing. So looking at the market, we've got Bitcoin, Ethereum, BNB. Ooh, BNB went through a burn again. They burnt about, I think, a million plus coins. But yeah, they went through their usual burn. I don't have that detail to hand right now, but I caught that earlier. But as you can see on the 7 days, the market's bouncing back a bit. We still got some of them that are down, but they were up uh, in comparison to you know a week or two earlier. And on the 24 hours, we understand it's a roller coaster, ups and down. So we're not really bothered about that, really. You understand what I'm saying? We're not bothered about that at all. But anyways, let's look at the market right here. I like to look at Bitcoin because Bitcoin is a major coin. It pretty much drives the rest of the coin. If Bitcoin gets pumped, the rest of the coins get pumped. So we can see right here on the daily, we've tested this line several times. Look at it. Look at the amount of time we've tested that trend line. We've even broke through and tested this major horizontal resistance. Support. I know I've got it as a resistance currently. Uh, yes, support. So it's acting as a support right now. And if you look at the MACD as well. We're looking a bit bullish on that right there. It's an upward trend. We should be, you know, getting more volume coming and hopefully, move up. And you look at the RSI as well. We're still pretty much in the oversold territory, so we should be getting a bounce. So more time we'll touch the 29-30 mark again and possibly bounce right back up. But we'll see how that goes between now and May, because we know last year the market tripled between January, February, March, April, May. The market literally tripled. So we'll see how that goes this time round. So coming up, we know we've got Bitcoin backed. So this is futures expiring. We had options a week ago. So, let's get ready for that. Again, that's going to cause the market to swing up or down. Let's have a quick look at Grayscale, see whether they've increased their asset under management. Grayscale, should I just spell that right? Grayscale. So let's see how much Grayscale's got on. So 39.1 billion. So they bought a few. If we go back here, 39.8. All right. They buying every now and then. So 39.6, yeah. So they have bought a few since we last checked. So we keep an eye on Grayscale, and of course we understand uh, the futures will swing the market. And as it's looking right now, we might get swung hard, but it is what it is. Remember, whatever price this closes at, the main market will need to go down or up to cover the difference. So keep an eye on the lookout for that one. But anyways, guys, that's all I have for you today. Appreciate you all listening in. Again, this is Limitless Talk, and this is your host X Limitless. You understand what I'm saying? Peace, love, and light to you all out there. Appreciate the support. Remember, share with your family, friends, and loved ones. Peace.